straight away we are going to start straight away we are going to start without wasting time. Let's go. So let me believe your morning is very okay. Yes, welcome from weekend. I believe you enjoyed because the market was fantastic. Yes, the market was fantastic. Okay, so let me share my screen, and there we go. Let me share my screen, and there we go. For those who watching us from YouTube channel, you will type your question in the comment section automatically. I will pass through there. I will reply. Okay, make sure you are following, and we move together. So like I told you before, that before you do anything, even though you do your analysis or not, but as long as the Bitcoin is not going on your side, then your analysis is nothing. Your analysis is nothing. As long as Bitcoin is not raising, then your analysis is nothing. I want you to get it clear. If the Bitcoin is dropping, your analysis will be useless. The market will just break your supports and resistances. It will simply break them. Okay? So therefore, before you do anything, before you go to any coin and do analysis on it, you first check how the Bitcoin is moving. Okay? Last time I told you, we are looking forward to break this small line of black that you are seeing here. This is the black line. This black line is connected here. Okay, so we expect the market to break this level, though we have this resistance whereby currently we are above that resistance. That means the resistance is no longer resisting, so it is now supporting. It is now support because the market is above it. When you look at this point, market is above the support. Are we together? Therefore, according to my observation, I'm seeing that Bitcoin is going to break this black line. It's going to break, in other words, it's going to break the previous high. The previous high. Bitcoin is going to break the previous high. Okay? And again, down here, we still have a valid block and fair value gap. We still have a valid block and fair value gap. If we happen to drop, then we're gonna drop to this area, then we will move up again. Hope I'm on point on that. Okay, so after looking at that, then from there we are going to look at the settings of this SMC. SMC stands for Smart Money Concept. So we are going to look at the settings here and we check how can we go about it. Okay, this is common. We normally teach the smart money, but we don't normally talk about the settings. So I want us to look at the settings and we master them, because you cannot use all indicators and you master them. You get the point? The more you add more indicators, the more you get confused. Trust me. The more you add more indicators, the more you get confused. Why? Because you will not get enough time to master them. You will not get enough time to master them. Today you are using Fibonacci, tomorrow you are using smart money, The other day you are using stochastic RSI. The other day you are using Bollinger Band. The other day you are using Chandelier Exit. The other day you are using ABCD V1. The other day you are using it is called pivot point C. You get the point. Then will you get time to master one? That is my question to you guys. Will you get time to master one indicator? And you say that at least this one I'm expert. At least this one I'm expert. Which indicator you mastered? You mastered. Which indicator? Can I see the comment section? Which indicator you think that you are? Oh, you are very, very expert in it. Hey, which indicator? If they say Fibonacci and you say, oh, my Fibonacci, I mastered that. Which indicator you mastered? Daba answering auto Fibu. Ha, so you mastered auto fib. Daniel, I can see you mastered SMC, smart money concept. Thank you so much. Where are the rest? Which indicator did you master? Moses Ogwang, he mastered a stochastic RSI. I can see you people, you love Fibonacci. You people, you love Fibonacci. Musisi. Okay? Yeah, it is okay. It is enough. Okay. I can see. Good enough. We mastered some of indicators, which is okay. We mastered some of indicators, which is 100% okay, ladies and gentlemen. So, for you, if you are still there, and you never mastered any indicator, please, I beg you today, you master this indicator. It will never disappoint you. So, for those who mastered one indicator, today, let us add this one to make them two. At the end of the day, the trading view allows you to add only two indicators. Let us add another one. Because at times, one indicator can lie you. But when you have them two together, you will get more confirmation. You get the point? So let us have two indicators at once, and we can see the way forward. All together. So don't master one. Don't master one. One will confuse you. Let us master two. Okay? You may say, alongside Fibonacci, I'm going to master stochastic. Alongside stochastic, I'm going to master smart money concept. You get a point? Yeah, that's when you will be successful. You get a point? So, now, let us go straight away to the settings, and we look at the settings, then we see the way forward. Now, when we look at the settings, I told you that colors doesn't matter. The colors you are seeing in front of bullish structure, bearish structure. What matters is, do you know what the color you decided to use representing? The color you decided to use, what is it representing? Is it representing bearish or bullish? That is the main important reason. You get the point? Don't mind about that. May I use the green? No. You can also use red. You can also use blue. As long as you understand what is the blue representing for. You get the point? Now here, when you look at this chart, here they are saying bullish structure. What is the meaning of bullish? Bullish is an uptrend. When we say the market is bullish, meaning it is raising. So that means this blue color that I selected here, Whenever I see blue color, it is representing bullish. If I change to red, meaning red will be representing bullish. Are we together? Then next one, we can see bearish structure. Bearish, it means downtrend. The market is falling. The market is dropping. That is bear. So on bear, I use the red color. So anywhere where I see red, I will be knowing that the market is going to drop. We are done with this point, this side here. Now let us come on internal label size. All label sizes are normal. Get it clear. Where you see the label size, put normal. Where you get it, put normal. Simple. The show swing structure must be having a tick. Must be having a tick. Now here we have the structures. Bullish structure again. But this one is show the swing structure. Now here we have gray and orange. So whenever I see gray, it means bullish. Whenever I see bear orange, it means bear. I think we are done with that. I told you where there is label size, put normal. Here we can see swing label size. We selected normal. The next point where we have swing points, don't tick. Don't put ticks. Show strong wicks. Don't put tick. Leave that point. Now we are going to tick the order blocks. Under order blocks, we are going to tick the two. Internal order blocks and swing order blocks. We are considering 5 order blocks. Okay? Then we go down. We come here on where we have our important order blocks. These minor order blocks, trust me, most of us, we are following minor or internal. You get the point? Internal order blocks. This one is green. And in most cases, on the chart, we are following the green ones. Because minor ones, meaning for them, we can use them and trade all the time because they are minor. We expect market to create them several times. Okay? Then, I decided to select a green one. I am using green and the opacity should be around 60. Yes, 60 to 70. It is here. I'm using 65. You get the point? Opacity of the color. Now, we are seeing the internal bearish order block. Internal bearish order block. We have red. We have red. So, the red one represents bear and it is also internal. It means it is in between the external or it is in between the other order blocks. Now, we have what we call the bullish OB. This bullish OB means external. External, or what we call major order block. This one is major. This one is internal. So meaning the major one are always far from the internal. We get the point? Now here we selected sky blue. So whenever you see a sky blue on your chart, it represents bullish. Therefore, and there the market will be very, very down. When you see the market touching this color, just know that the market is very, very down. Are we getting the point? Now here on bearish order block, I selected yellow. Okay, I selected yellow, and yellow represents external order block. It is far from the internal, and it is representing bear, meaning the market will drop. Okay, I selected yellow, and the opacity is the same. It's the same here. So here we have green, red, sky blue, and yellow. Then we go down here on equal highs and equal lows. If you want equal highs and equal lows, you can put a tick there. If you don't want it, then you can leave it. Here we are looking at the bars confirmation. Bars confirmation. I selected 3. Label size, I told you it is always normal. Label size normal, and we have fair value gaps. Okay, we have fair value gaps as well, and whereby we have 2. We have one that is representing bear and bullish. Bear and bullish. So you can select any, the color of your choice on bullish order block, or rather fair value gap, and we have bearish fair value gap. So it's you to choose the colors you want. Then here on extend fair value gap, we can select to 100. We can select to 100 because we want our fair value blocks to be a bit longer. If you reduce maybe to 5, you will find that your order block is very, very small. And when market comes back to test it, you will find that where the market is testing, the order block never reached there because it was short. Okay, so you must make it 100. So we have here what we call the daily, weekly, and monthly. Here we have highs and lows. Okay, so if you take daily, it means on your chart you will see a blue line which is representing a daily high and low. You will see a black line which is representing a weekly, the support and resistance for week. That's what it means. Then lastly, we can have also the monthly support and resistance. They are always 2 lines, as you can be able to see on the chart here. We have them on the chart. Okay, so we go down, we go to premium zone. We have premium, equilibrium, and discount level or discount zone. So it's up to you, to the colors that you will choose. But ladies and gentlemen, what I want you to understand from here, we normally trade between discount and equilibrium. We normally trade between discount and equilibrium. If you place your trade at discount level targeting the equilibrium level, you are more than safe. Are we together? You are more than safe, because as a market will always move from discount level to equilibrium level. Now we put tick here on inputs in style line, status line, and we gonna click on this 3 dots on your phone. It will be having 3 dots. Then here we have the word default. So you click on those 3 dots and it will show you save as default. Save as default, then click OK, and automatically your chart will be looking like mine. The way you are seeing mine, that's how your chart will be looking like. So now this is the discount level. Whenever market is at discount level, it is always down. If you understand the word down well, the market is always down when it is at discount level. So that's why I told you, from discount level, this market will go straight away to the equilibrium. This is my equilibrium block. It is in yellow color. Equilibrium block. So one could trade here targeting the equilibrium block. Are we together? So from here, I could target here. That is 6%. And this is Bitcoin. Okay? Now, I want us to master the blocks before we go further. Let us master the blocks. Let me see if we have any block here. Okay. This one is nice. And I shared with you last week this coin called TST. Now, we can be able to see that we had our discount level down here. We had our discount level down here. From discount level, we can see a first block being created here. A first block, second block, and third block. Here we have 3 blocks in green color. 3 blocks in green color. Whenever you find blocks fixed together, whenever you find blocks fixed together, and market comes all the way from premium, passing through equilibrium, and coming back to the first block, my dear friend, just know, this signal is always massive. As long as we have these 3 blocks fixed together, this signal is massive. I shared with you this coin. The take profit was 5%, and indeed it was massive. Though it was hard for you to identify whether the first block was tested or not. It was hard for you to understand whether the second block was tested or not. But if you observe well, all the blocks were tested. All the blocks were tested. One, we go. This block was created here, above this discount level. The block was created because of this raise. Can we see this good bullish candle? Let me try to zoom. This is a good bullish candle, and the next one closed at this point. Therefore, we can see the market coming back at this area, at that area. It is coming back to test the block. I think we can all see it. From there, we could enter there and target the previous high, which was at 3.6%. Previous high was at 3.6%. Therefore, we can see the second block being created here, then because of this raise. Okay? Therefore, market came back at this point to test the block, and there we could enter now to target this level, which was 6%. You will never fail if you follow well this amazing indicator. The problem is, most of us, we are impatient. We cannot wait for market to come back and test the block. We cannot. You want to chase the market when it is too high. You find someone trading here, expecting this coin to go back. Then you are risking your money. You are risking your money. And there you will float for good days. Now, The third block was created here, okay, after this market had gone all the way to this high. Okay, now since this block was valid, you can go to your royalty application. You preset the price. You say, you know what, I've seen this market rising rapidly to this level, but I believe since we have a block here which is valid, I expect this market to come back in this area. Therefore, I'm going to my royalty and preset. I preset the price. Immediately after touching the area, please, it was also possible. I preset, I put my take profit, I put my first buy, I leave. Now, let us talk about the drop. After entering at this point, someone may ask, now, how many margin calls could you be having at that area? Or which drop could you consider to cover? At that point, I could measure from where I entered from, which is here down. Then I make sure that my drop is going back to the what? To the discount level, which is what? Which is 14%. I will make sure, using my double up strategy, I'm going to work on 14% drop. Whether I have 2 margin calls, whether I have 3 margin calls, but I should make sure that my total drop is covering up the 14%. The reason why we trust blocks, most of you don't know. That is the challenge. The market is always moving in that way. We are going to use uptrend. Okay. Now, the blocks will come and be created here. First block here. Second block there. That is how blocks are created. Second block there. Another block there. We are going to start from here. Now, these are blocks. They were created because of this pullback. They were created because of this rapid rise in the market. The block will always be created after a rapid rise in the market. You must expect the block, whether you like it or not. Therefore, these blocks, they work as support and resistance. If market comes back all the way to here, I will trade. If market comes back all the way to here, I will trade. All the way to here, I will trade, because it is testing the support. It is testing the support. But what we need to understand, we cannot trade when the market has tested it for the second time. Now this is the first time. Now we can see after respecting here, market went all the way to there, that point, and it comes back. When it comes back, we cannot trade here. I want you to get it clear. Here we are not trading, because the market had tested the block already here, and we traded. Here we are either coming back to break the block, or it may respect it again, but we don't want to risk. Come on, guys. We don't want to risk here. We trade here only. You will never fail to get your 2% when you enter exactly at the block level. Now, another thing that I want us to compare by mastering this indicator. If the market is far from discount level, Please don't bother. Even though we have broke up there. But when you measure from the current price going back to discount level, it is over 50%. Please don't dare to trade it, because the distance is too far. And remember, the market has a tendency of coming back to test the discount level. If we come back, my dear friend, you are finished. You will float. Unless you have your good money, you can cover up that drop. But use, after knowing the 14% drop, then apply the what? You must apply the what? The double up strategy, which is this one. Do you still remember this? Hey, where are you learning? You are running, but we are here. Make sure you apply this double up strategy. Get your capital that you want to use in one coin, divide by these numbers. If you get your capital divided by 15, what you get is your first buy. And now that means your margin calls will be only 3. If you divide by 31, your margin call will be 4. What you will get is your first buy. If you are well conversant with what you are getting here, then go on and trade. But please, make sure your drop is covering what you want. Okay? I repeat. Make sure your drop is covering what you want. Or else, you can have a general drop. We may say that the general drop is 40%. According to the capital you are using, the general drop is 40%. And if you feel like you can always go and measure, then it is okay. Measure, get your drop, apply your strategy, and move on. Is that one hard? I believe no. It is not hard. Let us have one more example here. Okay. Let us have one more example. Now we have a beautiful brooks here. Good enough we are not, no one is floating in dogs. Let me remove the drawings and we see the clear chart. Okay. Now, the clear chart is looking like this. And I want us to follow this chart very well. I haven't seen any sky blue block. It is down here. Wonderful. We said the sky blue block is what? Do you still remember? We said the sky blue block is what? What is it representing?
Demand block.
It is representing what?
Bullish orbit.
Bullish orbit. It is the major block. It is the what? It is the major block. Are we together? I told you, since it is the major, we must expect big percentage. We must expect big percentage. The block was created here and the market tested the block here. Okay? Now, can you see the distance covered? Because of that, when you look at this, it covered 58%. Out of 58%, you can look at 25%. You can look at 15%. But just know, it is always sure deal. You get a point? It is always a sure deal. Are we together? That is the power of the major broker. When we test it, just know the market is totally down and we expect it to recover. We expect it to recover. Let's go to the next step. I think you have understood that. At that moment, from there, we have other blocks. The block was created here because of this distance. Because of this distance, this was block being created at that point. Now, from there, your take profit, I told you. Oh, what's wrong with you? Your take profit should be from here to here, where the market stopped from. Are we together? Meaning, I have to wait for this market to relax and come back to this block. And here, we can see the market testing the block. Therefore, here I don't need to ask anyone. I will trade targeting here where the market is coming from. From here, I'm targeting this point, which is 13%. Then my drop must be all the way from here to here. That is 13%. My drop, it will be also 13%, meaning I can have only 2 margin calls or 3. But using double up strategy, don't forget that. Using double up strategy, that's when you will survive. Even though it drops up to this point, even though it drops up to that point, after seeing a raise of 3% to 2%, you will be out. Because using the double up strategy while you are buying, it is helping you to bring the average price closer to the current price. That is the reason why we need to use the double up strategy. It is using while you are buying those drops, make sure you are doubling them. And don't use 0 point as your drop. You find someone having 0.5, 0.5, 0.7, 0.8. That is not a standard way. The market can drop just in 1 minute. It can drop 10%. And you are there having a setting of 0.5. Will you survive? You will float. You will float. Let's go. From here. From here where we are. Market created another block. If you can be very, very wise, you can see that inside the block, there is another block. Now, since this is another block, I still have another chance. That's what it means. Another chance to trade. When this market comes all the way after taking my 13%, I'm waiting for this market to come back to this area because we have another block here. So there is nothing is stopping me to trade from here. And where is my target? Where the market is coming from. It is coming from here. And my take profit must be also be there. which will be another 13.9%. I'm following one trade after seeing my what? My blocks. But remember, like I told you, you may fail to find it here testing the block. What do you do? Please preset. Go to your royalty application, preset this coin. You say, if you come back and reach here, just buy. You have your strategy, you have your trade, your settings there, everything is there. Just buy. Okay? Another block is here. Meaning, in this area, we have 3 blocks. Another block is here. Market went from there. It moved up to this point. Are we together? It moved up to that point. It never tested the what? The block. And now, you are waiting for market to come back within what? Within a block. And you trade again. All the way. Here you are not trading. From here, you are not trading. You are waiting for it here. Because the block was created behind here and market never tested it. Therefore, I enter here targeting this previous highest point. Are we together? Now I'm entering, targeting this zone. I'm targeting that zone. I'm entering here, looking forward to hit this target. And don't forget your drop. That again still, you have your drop all the way from here to here. That is around 15%. Using double up strategy, I can say, okay, since I have a drop of 15%, I can use 3 margin calls. 5, 5, 5. After 5% drop, I buy, multiplying with the money which is in the market. If in the market I have $100, I'm buying with 200. If market drops, 5%. If again it drops 5%, I'm buying with, you are doubling the money you used. You used the 200, meaning you are going to double the 200. This time you are buying with 400. Are we getting a point? If you had used the $30 to enter the trade, if it drops 5%, you are buying with 60. Because you want to double the money which is already in the market. And that's why they normally encourage you to use 10% of your capital. To use 15%. Because if you can manage that, then you can double up. If they say use 10% of the money you have, out of 100, you are going to use $10. Now, if we apply the double up strategy, meaning the second buy, market robot will buy with $20. You have them. Another buy, market robot will buy with $40. You have them. Meaning, with $100, you can have only 2 margin calls. Stay away from floating loss. Floating is bad. Yeah, that is a fact. It is what? It is bad. We want to keep earning. We want to keep earning. So, we are following our trade. Here, it came back to test the zone. We are not supposed to trade here. And here, we can see the market forming what we call the discount level. And here, it is having a block. And here, it is having a block. Now, we are waiting for this market to come back into... no, this block was tested here. It is no longer valid. It was tested here. We cannot consider this block as a valid block. Hope we are together. Now, what we need to note is this. The change of character must be 1. I repeat. The change of character must be 1, as we can be able to see here. This was a previous movement was an uptrend. Previous movement was an uptrend according to this picture. Now, this was a highest point here at the top here. This market dropped all the way from here to here. This was previous low, higher low. Therefore, if we close below it, this is automatically change of character, my dear friends. It is change of character. And it must be 1. So, after this change of character, market will go up. It will go back again, but it will not break this level. It will not break this level. Wawura, it will do what we call the retest by testing the order block. By testing the order block. And this time, it will be a bearish order block. That's why we say, let the market go back into the zone, retest, and it will definitely move down. Therefore, the fair value gap will always come after order block. I think I'm clear on that. The fair value gap will always come after order block being created. As you can be able to see that here we have a fair value gap. This will be the break of structure. Market is breaking the previous lower low by forming a new lower low. But after forming a new lower low, it will go back in fair value gap zone. So from there, it will again drop. This is a bearish fair value gap that we are seeing here. You don't know it? Okay. If you don't know it, I'm going to show you here. Now it is here already. Are you not seeing it? It is already here. This is what? This is a fair value of bearish order block. Sorry. It is fair value of bearish. If market comes and touches this area, it will drop. Don't get confused. Don't get confused. This is nice. I was looking at this coin yesterday knowing that we have it on features, but I couldn't find it. Okay. We have 5 minutes to end. Now, look at this. Look at this. Look at this. Look at this. Now, this market dropped all the way from here, then up to this point of discount level. Now, this was the change of character after discount level. This change of character is more important. As long as we are after change of character, after discount level, this change of character is much important. I repeat. Whenever you see it, just know it is massive. The market is going to go crazy. But it must be after discount level. Don't see it anywhere. Like here. This one wasn't necessary. This one. For what? This one, it was a trap. let the block be formed of discount level, let the market test it, let the block be formed, let us have the change of character. Just know that signal will give you more than 10%. Trust me. If you happen to see it after discount level, then that is massive. But don't forget, we have so many ways of trading. I told you from discount, we go to equilibrium. First take that profit. You will think about others later. From there, you see, free money, 11%. And you are looking at it as if you don't want money. And now, since we have an order block here, which is a bearish one, and it is the major one, market came back all the way from here to retest it again. And now, the swing traders could now enter from here after change of character, targeting this level, which could be 13%. Those are swing. They can keep there. And we can also keep there. There is no difference. Are we together? Now this market, this coin is coming back to retest this block, and there you trade. I wanted to share it as short, but I couldn't find it on our list of features trading because it was a sure deal. I told you, at times you may look at the candle you fear. Now, let me first remove this. This was a good pin bar. This one here. It was a pin bar. But at this point, pin bar for what? Is it a support? No. Then, why are you trusting it to long the market? It wasn't necessary to be there. It was just a trap to make you fear that this is a pin bar, market is going up. My God. We have to wake up, okay? Don't just go into the market, trade because you have seen a candle, which is a pin bar, which is a doji, and you just trade. Have more confirmation. Yes, I can see it was a doji. Yes, I can see it was a pin bar. But is it in the right place? Is it in the right place? If no, I can make a different decision. That is done. If you enter here, if you preset here, your drop should be at the discount level, because in most cases market can always come back to the discount level. Are we together? From here we can go to the discount level, which is 10%. It is small. Don't trade when the market is far from the discount level. If you can see that the difference is too big, please avoid. Wait for the market to relax. It will come back in your position. I think I'm stopping from here. Have we mastered this? Have we mastered this, or you are still lost? Let me believe we have mastered this. Let's not get lost again. If you not see it testing the block, let us not trade. That's why most of you don't trade our signals. Yes, you are 100% right, and I support you. You are following your strategy. You have your strategy. You are locked on Fibonacci and you trust it. But me, I have shared a signal while I was considering the smart money. It is different. It is different. You can go to smart money and get a signal. You can go on Fibonacci and you fail to get a signal. But the coin is the same. Are we together? We can have different indicators. Yours can say you buy. Mine can is not showing buy. You get the point? So there is no need to say you have shared that this coin, it is on premium. Do you know what I have considered? Are we together? Do you know what I have considered? No. Then relax. If you are focusing on Fibonacci, focus on it. That's why I told you we must focus and choose some 2 indicators and focus on them. Let us master them. Whenever we don't share signals, don't worry. Go on your indicators, look for coin, get the clear confirmation according how you understand the indicators, trade. No need to wait for signals, guys. I'm putting signals for those who are new. But you have 3 months in the business, you came to make money, and you don't have trading view. Are you sure you want to make money? We are getting money from trading view after doing analysis. We are not getting money if we don't have trading view. Where will you do your analysis from? Using Royal Chu, looking at the stochastic, looking at the Bollinger Bands. Oh my God. Oh my God. That is not analysis. You are just gambling there. You are going in Royal Chu, you are looking at stochastic, you are looking at Bollinger Bands. Just looking at them and you feel like, oh, let me trade here. My dear friend, you are gambling. Go to trading view and look at the market. How is the market? Can you draw the supports and resistance on Royal Chu? You cannot. Then, how do you comfortably confirm that I'm going to trade this coin after looking on it on Royal Chu? Those were just stories of marketeers. Please, don't suffer. Go to Royal Chu. You can get the signals there. Mama Nyabo, please. They are just motivating you, but for sure, it cannot. That is the fact. It cannot help you, my dear friend. Yes, Moses, what are you saying? I can see your hand is up.
Yes, thank you so much, Coach MRB, for the wonderful training about smart money concept indicators. I really appreciate you. Now, I have a question on what is the best time frame that can give at least the right time to enter, the time frame that can give you the good information.
Okay.
Is it 4 hours, 1 hour, 1 day? What is the best time frame that can give a good entry point? Thank you.
Okay, now, considering to smart money and considering to other indicators, I want you to trust me that the more you go to lower time frames, if I talk about lower time frames, I'm talking about 30 minutes, I'm talking about 15 minutes, I'm talking about 5 minutes. The more you go there, you will definitely get smaller money. You will definitely get smaller take profits, because you will find that measuring 5% on 15 minutes, you will be, actually, you will fear the distance after measuring, you will see that the distance is too long for you to make 5%. And you fear. And you see that the 1% is the one which is possible. And you end up taking 1% or 0.5 because of that lower time frame, or 2%. But when you are on 4 hours and you are measuring 2%, it's like nothing. You'll see that, oh, as if in 1 second the market will reach there. But now, considering to this indicator, let us start with 1 hour. If you know that you are focusing on Fibonacci, you are focusing on smart money, you are focusing on stochastic, the lowest time, let it be 1 hour and above. Me, I normally get my final touch on 4 hours. I check one day what is happening on one day. But as long as I open my chart on 4 hours and I find the coin is testing my block, I don't need to ask. I don't need to change. I just enter. Therefore, if I'm on 1 hour and I see the market testing the blocks, I may consider the rules. Where was the market coming from? If it is 1.5%, then I will take that. You get the point? Consider the rules. Where are you supposed to take profit from if you are on 1 hour? The same way, if you are on 4 hours, where am I supposed to take a profit from? If it is a previous high, then I make sure I measure my distance all the way from where I entered from up to the previous high, and I take my profit. Or else, if I can see that the previous high is too far, I can take halfway of that. If the distance was around 15%, I can take the 7%. You get the point? So we can always consider those 2 hours, 1 hour and 4 hours, if we are using those indicators. There you can get perfect entries, and as quick as possible you can definitely get out within a day, as long as the market is having what we call the momentum. Okay, any other question, ladies and gentlemen, before we call it a day? Please, from today, I don't want anyone saying market analysis is hard. Oh my god, we all studied physics, biology. They were too hard for nothing, because after the end of the day, we are not to be paid. And here you are learning while you are going to get paid. Guys, we need to wake up. Yes, Rose?
Thank you very much, Coach. Thank you for a very good presentation. I'm continuing to master the smart money concept.
Wow.
But please, may you elaborate a little bit about that chart of, you showed a table showing the double up strategy. May you explain a little bit there? I didn't catch it.
I think that
This course involves the same,
Thank you.
that
that's
class
the same thing I was about to ask.
last time. I think that class wasn't recorded. Whew. Now it is just here, my dear friend Rose. MC means the margin call. MC means margin
Okay.
call. So if we say MC1, it means margin call 1. Okay. If we say MC2, that means margin calls 2. We have 2 margin calls. Therefore, you will get your money that you want to use within 1 coin. For example, out of 1,000, we may say that you want to use 300. You get 300.
Yes.
If we want to use 300, get that 300 divided by this number on your right hand side. But this number is under 2 margin call, remember.
Okay.
You get the point?
Yes.
So if you get 300 divided by 7, what do you get? Hey, 300 divided by 7, you get you get 42. Are we together? That
Yes.
means your first buy is 42, but you will consider the drop. You have measured a drop, the coin can drop more than 15%. Therefore, if you can see that two margin calls cannot cover up the 15% drop, then I will definitely increase the margin calls to 3. Then what is the number at 3? It is 15. I will definitely get my $300 divided by 15. And this time, I'm getting 20. 20 is my margin, is my first buy.
Just the amount.
Therefore, using the double up strategy, buying 3 times, I'm using 20, 20, 20, 20. When the market drops, it will be 20 times 2. You get the point?
Yes,
On
yes.
your first margin call, the robot will get 20 times 2. It will be doubling the money you invested first. Hope you get the point. Therefore, buying using the double up strategy will help you to always bring your average price closer to the current price. In that, in any increase in the market, for you are out and others are crying for floating. You get the point? That is the difference.
I'm confused. That's it.
Yes.
Exactly. That is the difference. The one who is buying with 11111 is comfortably floating. But for you, after buying just one margin call, your negative will definitely reduce immediately from a certain percentage, whether it was 7 to 1, whether it was 7 to 2. You get the point? That is the difference.
Okay.
Yes, please.
Thank you very much. Thank you very much.
Okay. Any other? And we call it a day, guys. We are out of time. We are out of time. I think the rest are okay. Please let us master this indicator. Is amazing indicator that we can use even if we don't have any other indicator. Even if you don't have the supports and resistance, you can base on it and you do the best. Trust me, I have been using it. That's why whenever I share my short screen, the smart money must be on my chart, because indeed it can make a smart money for you. Otherwise, already my business name as usual. Allow me to stop from here. We meet in the evening. I wish you the best, and trust me, I love you so much, and I wish you the best.